Hey, everybody, and welcome to the Goodman podcast. In today's episode, we're diving into the world of AI in trading and how it's not just reshaping strategies, but transforming the way the markets actually operate. As usual, we've got our AI boffin, Raj, here to explain everything to us. So, yeah, Raj, I don't know if you want to just dive straight in and maybe explain in simple terms how AI is changing the game in the financial and trading sector.
Yeah, absolutely. I believe we are in a very interesting zone because prior to now, there were only certain people who could really bring in the the graduates who can crunch numbers, who can bring in PCs or CPUs, which can really do these high frequency trading, for example. All these were only available to the very top tier banks, investment firms. But now we come to an era where it's level playing field pretty much with the entry of AI. And what AI is doing is, I mean, just at the core, artificial intelligence, it's able to spot opportunities, trends in the previous trading opportunities, and then predict what might happen in the future. It's a bit like, I was thinking about an analogy before. I was like, when we were kids, we used to play this like mathematical games where we're like, okay, the first number is 3, second number is 6. What will be the next number? It's 9. Okay, well, that was easy because you know the trend, right? And so these trend spotting is a big part um, of actually figuring out what's going to happen next. And this the example I gave you is a very simplistic example, but when it gets complicated, when you have to find patterns, that's where machine learning comes into play. Machine learning is trained to over the years with giving a lot of data and human in the loop and other techniques. It's actually allowed to become intelligent, and that's what's helping us today to be a more productive race potentially. As you go into the next few years, we will be using more and more of AI.
Uh, Now, you've mentioned obviously like trend spotting and predictions and that kind of thing, but I read recently that the ability to predict, especially something as unpredictable as the stock exchange and like what's going to happen with certain stocks. You mentioned obviously like economists and that kind of thing study for years, but in a blind test, economists did no better than laymen guessing at random. How is AI going to actually impact this? Because I mean, it can make intelligent predictions, but there's a lot of unknown unknowns. We've spoken about that in a previous episode as well, especially when it comes to the financial markets. So, how is AI predictive modeling, going to be more accurate compared to traditional models?
I don't I don't think that suddenly we have a magic wand with AI. It is using the intuition of a human mind on steroids to really predict the future. It doesn't imply that it will get everything right. Also, today we still have some elements of hallucination, for example. And but what AI can do is to narrow down the options quite a lot. So instead of being able to just look at what we can assume or predict through our calculations, now we can use the knowledge of AI with all the stuff which has been used to train it to look at not only the recent past but maybe even historic past as well, which is hard to pick. I mean, for example, if the graph is showing it's going up, what can happen to it? Can it keep going further up? Will it go down? Will it go inside? Well, if we have some trends you can rely on to get a understanding of, well, this happened in this time, and so this might be the next step. That is really interesting. And also, for example, even simple things. Just I was telling you earlier before we joined that I love my ice cream, and over the weekend I had a lot of ice cream, and it was not ideal scenario for me. But so how does that come to play? I went to the store earlier today and I wanted to figure out what should I be eating, which is healthy for me. So I was just taking pictures of different labels, and based on what's been fed before, it could tell me what I should be eating for me to feel better from the store. Now these packaging, these products are all brand new. The ingredients might be a mix of what might be fed, maybe it's not. But it could predict based on what it knows already, and prediction of what's in the ingredients, to come up with the answer which is better for me. So it said, well, don't have butter and sugary food, have more rice crackers, for example. So, in many ways, this example of what I should be eating when I'm not feeling well, and the stock market is very aligned because it's looking at what's already happened, is currently doing in the stock market, and what I should be doing for a better response. So that, again, at the end of the day, I have to action it. And I often say that the last 30% is still human based. At the end, is what we do with the data we receive, or the AI is actually we receive, but what we do with that is what's going to make us successful or not. But it is just given me a good inclination of what I should be doing and what should I be eating, for example, or investing in, or not.
Yeah, yeah. Now, I mean, the stock market is, well, the world stock market is essentially a giant algorithm already. I mean, we're not standing on trading floors like, buying tickets like they did in like the 1920s, So we're already kind of in that algorithmic trading world. So for someone new to the topic, how does AI help in making high frequency trading faster and more efficient?
Well, I mean, a lot of my friends some of them were, still are, and some of them were working in high frequency trading. And high frequency trading is actually a very interesting space because, as the word high frequency suggests, it's trading at a very quick pace. So sometimes these trades are very small in nature, but there's so many accumulated together that the overall impact is really high. So it's about buy, sell, or keep, at any one time. And again, at this frequency, at that pace, it's really hard for human beings to be able to say, well, what should I do with the stock? But with the availability of computing power and AI, it can predict what I should be doing very quickly and to be able to maximize the profit. In this scenario, it's about the fastest trade made and the best potential answer in that small millisecond of a time you might have to make a trade happen. And for this purpose, especially, AI is really good because it can move fast. We have the GPUs today to actually power them. Often joke, I wish I knew 20 years back that this would come at some point in my lifetime. I would have probably invested more time studying these things. But the reality is that the GPUs today, which were not designed for this purpose. By the way, the GPUs which are today were designed for video games. As it happens, the same GPUs also are applicable to the AI algorithm and calculation as well. These GPUs can be used for these really fast frequency trading opinions or thoughts, and that really helps to be able to say, okay, should I sell, should I buy, should I keep, and do that at scale, and then that could mean ton of profit or loss in a day, in a week, in a month.
Yeah, yeah. Now, I mean, these trades for ages already, they've been happening, like I said before, algorithmically. You don't have someone, pressing the enter button necessarily, but AI is obviously making this system a lot more quick. So, with speed comes the potential for catastrophe. What kind of fail safes are in place? Because, I mean, over the course of this podcast, since episode 1, we've discussed how AI is not here to replace humans; it's here to augment human capacity and ability. So you still want a human involved, but when we're speaking about like split second decisions, and you've mentioned obviously GPUs, I know quantum computing is the new thing that's going to eventually come in and make things even faster. I mean, the human brain cannot keep up with that kind of speed. So what kind of fail safes are going to be in place to prevent, you know, this algorithm from going rogue and, you know, potentially crashing the entire world economy?
Great question. I just kind of want to just clarify because and it's exactly a real issue. Like, and you know, where do we go with this? But
Mm,
just to kind of backtrack a little bit. These these trades was happening even before AI was a mainstream concept. Some companies were actually using AI already in the process, where others were actually had built a more simpler algorithm which was not intelligent. Let me explain
mm,
that a bit better. When you use an Uber app, for example, it's purpose built. If a user asks for a taxi, do this. You can't go to Uber app and say, "Hey, make me a burger." You know, they're like, "What are you on about?" And it's not
mm,
what I do. So it's been programmed to just do that one thing. Whereas in case of an AI, it's actually making decisions based on what we allow it to be fed with, what it's been trained on. So you can make much better decisions at every time. Hence,
mm,
when we apply AI to a problem which better understands the background of a problem, then these solutions are a bit more holistic and better thought about than
mm.
just a yes no algorithm like a Uber app algorithm where it doesn't have intelligence. I'm not saying the AI is not built into Uber app as well. It is, but the simplistic form is that it's a if this then do this, if that then do this. That's what simplistic algorithms usually are built on. Now the issue is how do we make it safe for human beings. At that frequency, it's really hard to look at every trade which is happening and be able to say that this should go through a approval by Tim or by Joanna. It's not going to happen, right? But
Mm.
at the end of the day or the end of an hour, there could be mechanisms in place to make sure that the overall output, the overall choice made by the AI is done the right way. And if it's getting it wrong, feed it back to the AI engine to improve it. That's the human in the loop scenario where we can make it better. In some cases, we might realize that over time, some algorithms or some AI, some large language models or LLMs for AI machines are better than others. And if you look at the market today, these AI engines are replaceable because they have the same input, they have a black box, and they have an output. So if we change the black box itself, doesn't really matter how it goes about it. The engines are getting better, and so you can just replace it with the other ones. For example, just last week, Claude or Anthropic announced Claude 3, which I've been testing over the last few days. It's pretty good. It's actually much better than Claude 1. So, will I be replacing ChatGPT with Claude 3? Maybe not yet, but I can. And then what I would do is change the engine, and I will get a better result at the end of it. So these will keep getting better and better, and will require less human intervention because they are much smarter. But we should still have somebody in checking the results and making sure that the AI is doing its job. If it's not, then be able to go back and intervene to change the outputs to become better.
Yeah. Now, I've got to follow up on that regarding sentiment, but I think that we must maybe dive into the sentiment stuff before. So we chatted about this in a previous episode as well about how AI can analyze sentiment. So how does AI understand market mood through analyzing news and social media, and why is this important for traders? And then to link directly back to what you've just said. A lot of people have made their fortune by going against, sentiment, swimming upstream, if you will. So if we've got an AI that is analyzing sentiment and, suggesting or auto trading or whatever the story is there still room for these outliers to come in and make $1 million on going against the grain?
Absolutely. And just to kind of clarify, AI is just the engine to make our vision as human beings a reality. It is not on its own, it can't do much unless we have a theory which we believe in, which AI is implementing, especially in the case of high frequency trading. So when we talk about implementing AI in trading, it has to be fed. Well, what is our philosophy? What's my philosophy? My philosophy is to go with the market, go against the market. My philosophy is that retail is the future. My philosophy is that a country is going to succeed in the coming years. All these things have to be fed into the AI to make it to follow our philosophy, our thought, our value system as well. So without that, it's not doing adding any value really, it's just doing its own thing. So
Mm.
that's unique to every company, every culture, every trader, and that's super important because that's going to give us the advantage over others. That's one point. Number two, how does it understand sentiment? Sentiment analysis is a very important part of AI and has been used for many years. I remember there was a thing called IBM Watson, which I saw multiple years back, which it was doing, and it was charging, I think, at one point 10 cents or like 20 cents to a dollar to like analyze one line of one line to know if it's negative, positive, or neutral. That's always doing. You enter like, hey, this milk is very, very yummy, and they'll just say, oh, that's very positive, awesome, right. And the other one is, something is very flat, and it just says it has an emotion. So that is just analyzing that at scale using deep learning or machine learning is what basically the sentiment analysis is doing. Now, why is it important? As I'm not an expert trader or a, I'm not into trading. I once sort of did a little bit of work in banking sector, but I'm not a banking expert. But from what I'm seeing as an investor myself, I noticed that the market does its own thing. Maybe the sentiment is is optimistic or not optimistic. The market will do its own thing, and sometimes market follows the sentiment of people, sometimes doesn't follow the sentiment of people. Sometimes the market is growing, pumping, and the actual economy is in shatters and still is growing. Right? No one can really predict what's going on. People sometimes are positive about the future. The reality is that the economy is not really as positive as people are. So knowing people's sentiments, knowing companies' thoughts, knowing the owners of the company's thought processes, the executives in the company, the experts, the pundits, their prediction allows us to figure out what the market might do in the future. Again, there's no right or wrong in this. Sometimes it does follow, sometimes it doesn't follow. But many a times there is a trend. Like I gave the example earlier, it's really hard to analyze trends just using our mind as individuals, and maybe even if you get lots of people together, it's very hard to analyze that. So what can we do using AI is to take all these different trends together, look at the previous data which has happened over the last say 100 years or so, and then be able to build a model, or be able to build a prediction of what happened next. Doesn't mean that's going to apply all the time, but if we use that previous model and we use our theory on what we believe is right for our business, we can then make better judgments on our investment in the future. This would have been very difficult if we didn't have AI, for example, because to take our theories, our ideas, and overlay into historic data, it's a complicated matter, but it can be made much easier using AI. And that, for me, is absolute high value opportunity with AI in any sector, not in finance.
Yeah. Now we've kind of run out of time in this episode, but if let's just cover one more point. What you're explaining now is kind of adaptive learning, if I'm understanding correctly. Essentially the algorithm is learning by experience. It's processing all this big data and then learning by experience based on the outcomes that it's outputting. Do you have an example where adaptive learning by AI has significantly benefited trading outcomes?
I'm sure that there are many, but I will give an example which is not in trading, just to kind of give you an idea of how that might work really well. And the example is of cars and Tesla. I think I mentioned this in the previous episode. So one thing which Tesla does, and it's from what I hear and from what I've been reading, is that when the auto driving in Tesla encounters a problem or a potential gray area, those updates are provided to all the different cars across the world, which are Tesla. And so what's happening is that one accident which happened or one crash which happened informs and makes that AI tool better in figuring out where is a challenge in the vision of the car, where there might be a potential object in the road and didn't see it very well, or it got it wrong. So one accident happens in Arizona can improve the car running in London because it taught itself by adapting to the challenges which it has encountered in Arizona. That for me is really powerful because now we can actually learn from a challenge in one area. Similarly, in trading as well, if one trade goes wrong and we can feedback to say, hey, listen, you got this bit wrong this time around. Next time when this happens, do this instead. It will keep that in mind and it will compile the AI learning. And that adaptive learning will then help to encounter such issues will not be an issue in the future because it will then correct itself. And this can also be done in ChatGPT as well. If you wrote something and give a wrong answer, you can correct it. And now it has memory as well, so it can actually remember that and correct itself in the future as well.
Amazing. That's a great place, I think, to leave and wrap up today's episode. We hope you listeners and viewers found the insights into how AI is impacting trading interesting. A big thank you, as always, to Raj for breaking down a complex topic into something that us mere mortals can understand. So don't forget to subscribe to the Goodman podcast for the episodes where we for more episodes where we demystify the impact of technology on various sectors. Until next time, keep exploring and stay curious. Thanks, Raj.
Thank you, Megan.